All right, everybody. Ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar, Market Movers for today, the 25th of April 2017. If you have a look at your webinar interface, you can see that small questions box. And right now, I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. Thank you very much, Mike. We appreciate you have been the first one. You were fastest today. Thank you very much for that. And through the course of today's webinar, please put any questions that you might have into that questions box, and I'll do my very best to answer those questions as we move through the webinar. Today's session, once again, is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them and make sure that you're really comfortable with them. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be having a look at the live markets which I find interesting right now, which are moving right now, and therefore might present us with opportunities. But again, it's just you're looking inside my head. It's never a recommendation. It's educational purpose only. So please make sure you're okay with that. And of course, we have again the risk warning directly from Nadex this time. Trading on Nadex involves financial risks and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just get started. Today's agenda, just as usual, we're looking at the markets. We want to formulate an idea what the markets might be doing next. We want to have an edge. That edge is coming from our strategy. And the basic idea is if we have our strategy, a time-proven strategy in the markets, and we execute that strategy flawlessly, we make the law of big numbers work for us. That edge of the system should start to work for us. And after a large number of trades, a large sample set of trades, in the end, we should be coming out ahead. This is pretty much what trading is all about. Trading is not about having only winning trades on your hands. Trading is not about knowing what the market is doing and being right all the time. No, it's about being right more often than not. And if you're right, you want to make more money than you're losing. And that's pretty much it. And this is what we want to do today and have a look at the live markets. So let's get started here. And as usual, I'm just switching over here to my charting platform. And we want to be looking at the index markets today. We want to start here with the S&P 500. This is the futures contract, the E-mini on the S&P 500. And sure enough, you can see market prices pretty much spiked higher. On Monday, we saw some action. This action on Monday was not bad. Let's make it larger. We're looking here at the daily chart. And you can see that price pretty much spiked higher. Until then, we still have seen some bearish action. This high here, definitely lower than the highs here. So overall, there still has been some pressure, and this candle here, it's not that perfectly bearish. However, it's definitely not bullish at all. So at that point, the market still had seen some pressure. However, what happened over the weekend? French elections, if this is what you want to believe, that sent the market higher. I don't know what the market has been doing or why the market is rising. Is it really the French elections or is it anything else? Is it really important that we understand what's going on there? No, it isn't. As technical traders, we want to look at that chart and we want to trade what we see on that chart. Guys, you see, the problem with all this fundamental approach and having a theory about what the market should be doing if candidate A or candidate B is winning any elections, or what the interest rate decision might be doing, or how the earning numbers of a specific company might influence the stock price. First thing, you should be able to get the direction right. And next thing, not only is it important to get the direction of this news release right, but also how the market will be reacting to that. And when I started with my trading, this was my favorite game. However, I got it right most of the time. However, I didn't get my trades right. And in the end, I stopped caring. I didn't, I'm not looking any longer at what the market, about theories, what might be pushing the market, yes or no. I'm looking at, yes, there's a news event. I have to react on that news event. If I want to have a position going into that news event, it should be a position here with some of the Nadex contracts. Why? Because they are strictly risk limited. You have a with a binary or a spread, you know exactly upfront how much you can potentially lose. This is completely different to what you might be losing if you had a position on with a future or in stocks or CFD or any other kind of instrument, depending on the risk structure of those instruments. But pretty much with Nadex contracts, you know how much you can lose upfront. And just look at what the market has been doing here. If you thought the market might be continuing lower, you entered a short position here, a meaningful stop loss location would have been just above the high of this recent pullback. So my stop loss location probably would have been here. But guess what? When the market opened on Monday, it opened up here. And this is a huge gap to where we closed, and even a huge gap to where I wanted to close my position with the stop loss location. And therefore, I would have lost more on that trade than I would have anticipated. And for that reason, going into those events like elections, big national elections, if you want to have a position, why not focus on those contracts which allow you to perfectly define your risk exposure? This is just a short sidewalk why I don't care about fundamentals. I just want to trade what I see on the chart. And here, once again, perfect example, you would have lost more on that potential short trade here than with a risk-limited contract like you can trade them here at Nadex. But I don't want to focus here on the risk aspect. What is the market doing right now? Sure enough, we have pushed higher. We have now made let's compare it here. You can see this was the previous high that we saw here clearly, definitely a higher high here. Monday's price action was a little bit, can the chart be larger? Henry, I'll do my very best. I can zoom in a little bit more if that works for you. I hope it works for you because now my capabilities of increasing the chart size pretty much are, all right, perfect, glad to hear it, Henry. Thanks for the feedback. Yesterday's price action was a little bit bearish. Why? It's a green candle, sure enough. But see what price had been doing all day. It had been pushing higher. But in the end, the bulls, the buyers haven't been able to really sustain the momentum. And in the end, price came back by quite a bit. So although it appeared to start as a very bullish day, in the end, the bears have been pretty strong. And all in all, could have been a fair chance to send this market lower. However, this is not what happened today. The idea is always to have some kind of plan about what might be happening and how you react on that. And sure enough, you can see up until now, the markets, of course, are still open for at least 4 more hours and or about a little bit less than 4 hours. And of course, you always have the non-regular trading hours for the futures, for the indices. So that story isn't finalized yet about what this candle should be looking like at the end of the day. However, currently it's looking pretty strong and pretty bullish. So the idea might be, okay, if this time frame looks rather strong, why not look at lower time frames for potential trading opportunities? But keep in mind, we're still here in this sideways phase now. This low here was a higher low compared to that. Now we're making here another higher high. Technically, we might be inclined to start to call this once again an uptrend, but unless we have really moved beyond that trading range and at least moved beyond the high that we saw here, and this was a high just 2 points shy below 2,400. I'm not really that bullish here on the higher time frames like the daily and the weekly. Looking at the higher time frames, we can have a look here at the weekly, and sure enough, the weekly is pushing higher. You can see once again that gap up from here to there, once again showing the potential holding risk and overnight risk here in conventional contracts. And clearly good strong uptrend here on the weekly chart. We saw this pullback here into a moving average buy zone. Personally, I would have expected that the pullback would have taken us a little bit deeper there. Would this have been a good trading opportunity here on the weekly chart? Not really, because of the gap. If I wanted to have entered that position, I would have entered here, and once again, let's make it larger. I would have entered here with a stop buy just one tick above the high. And I wouldn't have been filled here on that contract because the market gapped higher. It never would have really met my limit order here. And with the gap, it's just too large. And apart, and talking about being too large here, the size of this candle, I want to have at least a 1-to-1 profit opportunity or profit target before price has to make new higher highs. And therefore, this candle here was too large for me to even consider this on the weekly chart as a potential trade. But overall momentum here on the weekly chart is clearly pointing higher. The monthly chart has resumed its good strong uptrend. And yeah, the daily chart also is now pushing higher, but we're still within that range. Coming to the lower time frames, we can start to see that price is definitely in an uptrend here on those different time frames. A little bit of sideways phase here on the hourly chart, but the 15-minute chart, very nice, very powerful move that we saw here. Price has been pushing higher. We have moved now a little bit sideways, came back here to our moving average buy zone. And now, once again, what could have been a potential pullback area? And for my pullback areas, I'm looking at multiple factors that I want to see there. First thing, I'm seeing that I have a daily R2 pivot point level sitting just here. So that would be my first indication that this price level here might be interesting. So price might be pulling back here. Next thing that I want to do is I want to see that price pulls back here to a moving average buy zone. And sure enough, there's this pivot point here, that price level clearly is in the buy zone here right now. Next thing that I wanted to do was to put in here my FIB retracements and see if something happens here. And guess what? The 50% FIB retracement just sits here on top of that pivot point. Suddenly I start to see a certain cluster setting up here. So if price pulls back, I know that a lot of pullbacks take price to the 50 to 61.8% retracement before continuing higher. So now I have two indications here that this price level might be interesting. I'm just picking here once again my FIB tool, and I'm going down to the next previous level here, roundabout starting here. And guess what? The 38.2% retracement here is again very, very close. It's not a perfect cluster, but once again, it's very close to this price level here, which is at around about 2,382.25. Let's put it that way. Now, a potential game plan for me would have been to wait for price to hit this price level here, maybe even waiting here with some kind of limit order and waiting to be triggered into that trade, and then trend continuation here to the upside. Why a trend continuation to the upside? The trade clearly, or the trend on this market here clearly is to the long side. We get always those pullbacks back to our moving average buy zone. Price keeps on pushing higher. We see good strong momentum here, both in MACD and RSI. A lot of different factors supporting a potential trading decision here to the upside. So my sweet spot would have been a pullback here, and if I would have gotten that pullback there, a position for a trend continuation might have been in my game book. That's currently what I'm seeing here on those indices, and the idea would be now that we're switching shortly over to the Nadex platform. And of course, big question is always, which contract could I be trading in either direction? And why not have a look at that on the platform? And let's just switch over here to the platform. And guys, I'm doing all this in a demo account. I will be placing trades in a long direction for rising prices. I will be placing short trades for declining prices. This is again just for educational purpose and just for demonstration purpose. I do not want you guys to get the idea, Philip told me to do ABC and that's why I did. I want to explain how I look at the markets, and I want to show you how you can be trading those contracts, what you want to trade, and if you want to trade, and in which direction. That's completely your call. Please understand that. Now, always trade and try first with your demo account. And if you're looking here at your demo account, and if you signed up for a demo and you've forgotten your credentials, login details, just hit this button here, forgot your login details. You either remember your password or your account, and you're good to go within seconds of submitting that form information, and no need to call the hotline. You're good to go there. And once logged in, your demo account pretty much looks like that. And yeah, we're looking here at a potential long trade on the S&P 500. So I'm going here to my indices binaries, to the US 500, and let's look at the daily 4:15 p.m. You can see that those contracts still have about 4 hours life cycle, or 4 hours left until they expire. Now, what could we be trading here? Well, idea is price might be pushing higher here, and let me just quickly jump back here and see where the high of this price move has been, 2,387. So switching back here, let's pick this contract here. Let me just trade this contract 2 times, and I'm in. Now, why that contract? Well, I think the market might be going higher. It's an uptrend, and everything's good. And first thing, I never know if it's going to work out or not. Nobody knows. It's all about the probabilities that I mentioned in the beginning. If I think price might be going higher, I could be looking at this contract. Now let's have a look at that contract once again for a little bit more time. I placed 2 orders. I traded 2 contracts. So this contract defines a strike price of 2,388. So what is the winning scenario for that contract? Well, in about 4 hours time, when this contract reaches its end of lifespan, is about to expire, it is determined by looking at the underlying market, which is the S&P 500, the E-mini future. Where is this market trading? And if it's trading above 2,388, then this contract will settle for 100. If I think that the market is trading above this contract, above this strike price, I'm looking probably into buying this contract. I just bought this contract now for about $38, which gave me a total risk for 2 contracts of $76. And please remember the risk disclaimer in the beginning. When we said the risk-limited nature of Nadex contracts, this is how much I can lose on that contract. Yes, we have exchange fees, commissions, all that stuff, but pretty much this is my risk on the trade. Let's forget the fee schedule for a moment. $76 is what I'm about to lose if this trade does not work out. What is the not working out scenario for me? The not working out scenario is price of the S&P 500, of the E-mini futures, will be below 2,388, or exactly at 2,388. And exactly at that point in time when this contract expires. It doesn't matter if it's trading higher 5 minutes after expiry, or it doesn't matter if it's trading above this price level 5 minutes before expiry. This final settlement will only occur when this contract expires. However, if price starts to push higher and rallies and moves beyond this level, I don't have to hold my position here. I can easily trade around that trade, and I can easily close that position completely, or just a portion of my position, trading into that direction. Now, why not think about doing that? I now have a position of 2 of those contracts, market potentially going higher, at least that's the big idea here. And if I'm looking into that, why not think about taking at least some money, some risk off the table if price actually starts to rally and move in that direction? Well, I don't have to trade 2 contracts. I can only also trade 1 contract. And I don't want to sell those contracts now for 32 or 37, 38. I can place a limit order. And the idea here would be, if I paid 38 and market actually starts to rally, why not take at least a little bit of profit off the table and assume if price pushes higher, pushes a little bit beyond, there might be a decent chance that this contract could be trading for $60. And if I'm placing this order now, you see I have a limit order waiting here for that exact same contract. And if this contract is trading at $60, one contract would be closed. So I've taken of my $78 risk initially, or $76 risk initially, I would have taken $60 already off the table. So my total risk on that trade would now be just $18. Still $18 risk for a potential profit of 100 if the market settles above that. If you tell me now, Philip, what you've been telling me is all very nice and dandy, but haven't you noticed that the candle is starting to flash red? And I think your explanation of this pullback level here and its magnetic power to attract price action, why not speculate that price actually might be going lower? Sure enough, we can do that. And we have noticed that this level here is sitting at 2,382.25. And this is pretty much this contract here. Now, if we speculate that price might be coming lower, might be coming more towards this price level, I'm looking into selling that contract, and I could be selling this contract here 2 times. You notice we are trading a different strike price now, same expiry cycle, could be another expiry cycle. Expiry cycles, you want to time those contracts. We have about 3 hours and 50 minutes left for price to hit this price level if price starts to push lower. And you have to understand and think, do you think the speed of the market, the volatility of the underlying price action is strong enough to actually make it likely that this price level is being hit or not? You have to balance this in your head, just like you're crossing a street and the car is approaching. Your brain is doing amazing calculations in the background without knowing the precise mathematics, but you have a fairly good understanding and an estimate if you're going to make it or not before the car hits you. And it's the same thing here. If you look at that chart and are just eyeballing the current speed of the market and the price level and the time left, it's your assumption. The market is giving you some hints. The market is telling you, have a look at the price, take the mid price of the bid and offer, and think of that as a rule of thumb, not precise, but just as a good guidance. That could be interpreted as the probability that this price of the price of the underlying is trading above the strike price at expiry. So currently the market is thinking we have about a 71% probability that the market might be trading above the price level that we have identified previously. It's a mathematical model. In life, everything is possible. It's just it's just a tool to be used. It's not precise and it's not certain. Nothing in life is certain. But it's a rule of thumb. And think about, you have to balance this probability and the risk-reward ratio on that trade. Now, let's have a look at what's going on here. We are selling this contract now 2 times. We're selling a contract which is trading here at 65.50. What's the maximum profit I could have on that trade? It's $131. I'm selling something now for a price above 0, and if everything works my way and price crashes down here and is trading below the strike price at expiry, then I'm going to keep what I sold this contract for and just walk away. I have to pay nothing. All this which I get now is my complete profit. However, if the market rallies higher or stays above this level here, I would have to settle this contract for $100. I received $65.50. This means I'm just having now a risk of about $35 per contract. 2 times is about $70 in total. Now you can see the market is giving me just about a 29% probability that this trade might be working out for me. However, I'm making potentially 131 for a potential risk of 60, or for a risk. This risk is not potential, that's a true risk, for a risk of 69. This is not quite the 2-to-1, which would be very nice, but it's very close to 2-to-1. And so risk-reward ratio is okay. It's not outstanding. The probability is not outstanding, but this looks like some fair ground in between. So we could be just looking at this trade and placing that order as well. And yeah, you see we are filled. And same idea, how could I manage that position? Pretty much the same thing as before. We're just looking at this contract here, and thinking, okay, if price actually starts to go lower, I want to scale out of that position and I want to buy one contract as a limit order if price drops down to 45. Same idea, I'm taking money off the table. I don't have to wait until this contract finally expires. I just want to see what the market is doing there. And if it starts to move my way, why not start to take some profits and reduce risk on those trades? So that's the idea, how this potential setup here might be tradable, depending if you think price is shooting higher now, or if you think, sure enough, price has to come lower and at least hit this this cluster. Essentially, for a cluster, we would be looking for a little bit more, but actually we have quite a lot going here for that cluster. So I would have probably waited for my own trading for that cluster to be hit until speculating here on a move higher. But that's the nice thing about trading. Your assessment might be completely different. I just want to show you guys what's going there and what's going on there. All right, so that's it for the S&P 500 and the indices. Talking about the indices, let's have a quick look at the Russell 2000. The Russell has been clearly very, very lackluster and sluggish and not really performing that well. However, recent price action has sent this market clearly higher and already started to push beyond the trading range in which it had been. I'm not interested in the Russell right now because obviously there isn't really a trend in place here now. But I have the impression that the Russell has the idea to push a little bit higher, and the Russell, at least that's my idea here. And again, in the beginning, I said don't talk about your ideas and what you think the market might be doing. Just look at price. If price goes higher here and starts to push beyond, I think Russell might be having some more fuel left, because compared to the other indices, I think he has some potential to close that performance gap, which he has seen back in there. All right. Sharon has been asking if that was a spread which I traded. No, it's not a spread. A spread would involve selling also or trading different strike prices pretty much in the same direction, or thinking about hedging your position there and taking some risk off the table there. If you combine those two trades, yes, technically I think it could have been a spread, but that was not my intention here. The intention was to show both a long setup and a short setup. So don't mix this up with the conventional option spreads. And I have to think about what this trade setup could have been combined. Right now might be a spread, but that was not the intention. I want to show both a long setup, long trade, and a short trade. I hope this helps with that one, Sharon. All right, so let's quickly jump, as time is already running short. I want to talk about both gold and silver for a brief moment. What's going on in the precious metals? Weekly chart, nice uptrend, clear higher low, clear higher high. We're pulling a little bit back here. We could see a little bit better performance here. However, if we look at what our indicators tell us, we still see good convergence here on those, both on MACD. The recent higher high in price was definitely confirmed by a higher high in MACD, and also in RSI. So that's pretty much still looking very good and strong here on the weekly chart. The 10 period clearly above the 20, 50 still pulling back. It's not that clear setup now on the weekly chart, but the bigger picture here on the weekly is still pointing higher. The daily chart, however, has now taken us back quite deeply here into a moving average buy zone. Fanning structure, yes, it's there. Yesterday's price action was pretty bullish. Why? Because this whole move to the downside got rejected by the market. However, today's price action, on the other hand, is again pretty bearish. Would this have been a trade setup yesterday? No, it wasn't. Why? Because this candle is way too large. Remember, I always want to see a decent reward to risk ratio on my trades, and with this large candle, it just wouldn't happen. And that's why no trade here for me yesterday and today's price action. What would be very nice would be a very small bullish candle setting up here tomorrow with a potential to push prices higher. And the idea here would also be to start looking for potential levels. And it's perfectly fine to zoom out here by quite a bit, because by zooming out so far, we can start to see where price action actually might be clustering and where we might be able to identify some levels, some clear, good, strong levels where price might be reacting to. Currently, precious metals, gold potentially setting up here for over the next few days. Silver, on the other hand, and this is pretty sad, because now let's talk about fundamental beliefs. Personally, I think silver has a lot of potential to go for a lot of different reasons, but obviously Mr. Market doesn't agree. Deep pullback here just recently during March, new higher high here, but overall much worse picture market performance here in silver. And sure enough, the recent pullback here, after giving us a higher high, made a lower low compared to that one here. Again, yesterday's price action was a little bit bullish, too much range. And today's price action pretty bearish. And just compare the structure that you see here, not really that clear of a higher high in the weekly chart, the monthly chart being in no man's land. Gold is currently looking much clearer, much better chart structure. So if I want to be trading the precious metals, if I want to trade them towards the long side, I think gold is giving me the cleaner chart and probably the setups where I can identify more factors supporting my trading decisions. And in the end, this is what trading is pretty much all about. You want to stack as many factors and findings in your favor. You want to increase the probability that the next trade might be a winning trade. You never know, but you want to stack the odds in your favor. All right, guys, we have overrun a little bit. Sorry about that. Let me just quickly jump back here to the final slide. And yeah, I hope you liked today's session. There are many different ways to be in touch with Nadex. Sign up for that demo account if you haven't done so already, and give it a go. Take it for a spin. It's a lot of fun, and I hope you've seen today with me placing those trades how easy it is to actually open positions and manage those open positions. Please understand that those Nadex contracts, they are not fire and forget. You can actively manage your position. This is very powerful. And you have also seen the risk limited way you can be trading with Nadex contracts. So those two things together, I think, very powerful here. All right. Thank you very much for the feedback, guys. Really appreciate it. If there are any questions, please let me know, and I'll answer those questions after this webinar is officially done. And to close this webinar now officially, as usual, after this webinar, there should be a short survey, and anything that you have which helps us to improve those sessions for you, please let us know. We are running those sessions for you, so any feedback really is appreciated. For me, it's been a pleasure. Thank you very much for attending. And yeah, now to all of you, a great day. Happy trading. Thanks again. Take care and bye-bye.